So if you thought this gas hike was bad, wait till you get a load of the 2023 property taxes in Philadelphia. Hey, this is Bill Eaves, Associate Broker with RE/MAX in Bensalem. There's some things going on in Philadelphia right now you need to know about. And this is not just for buyers, sellers, and executors. This is going to hit everybody who owns a business or lives in Philadelphia or rents in Philadelphia across the board. So the powers to be have decided to raise property taxes, and they're doing that by raising the assessed value. This goes for each and every property, and in some areas, it's a little worse than others. Sometimes it's a staggering difference depending on where the property is in Philadelphia. So to help you better understand this, I took a look at 6 properties that have either recently sold or will soon be selling. So here's what I found. For one house that I've coming up near Bensalem and Rawn in 19111, their taxes go from $2,876 to $3,491 a year. Another one in 19154 off of Waldemere Drive will go from $2,796 to $3,402. So according to the ones I looked at, the ones in the Northeast, the far Northeast, will most likely go up between $650 and $700 a year. One house I ran in Chestnut Hill in 19118 went from $3,621 a year to $6,427 a year. That's based on a new assessed value, which took the house from $258,700 market value to $461,000 market value. And it's not worth that much. So if you're paying your property taxes with your mortgage payment, this is going to affect that payment also. So if your taxes go up $650 a year, that's roughly $55 a month. When it's time to pay those taxes, the mortgage company is going to send you a bill for, again, we'll use the number $650. If you can't pay it right away, they'll just tack it onto your mortgage. But they're also going to tack onto your mortgage next year's payment of $55 a month, or $650 for the year. That's going to take your payment up $110 per month. And if you're a renter thinking that this doesn't apply to you, there's an old rule of thumb. When the landlord's expenses go up, the tenant's rent goes up, normally. So what are your options? First, you have every right to appeal this assessment. If they bumped you to $400,000 and houses in your neighborhood have recently sold for $300,000, by all means appeal. You'll need to prove that the market value is less than what they're assessing the market value to be. To do that, you're probably going to need an appraisal, and you can go online to submit your appeal. I'll put a link to that below this video. Secondly, you should know that Philadelphia, just like all the surrounding counties, and all the counties in Pennsylvania for that matter, have something called a homestead exemption, or the Homestead Act. This allows homeowners who live in their properties to lower their taxes by exempting some of that assessed market value. Just like on your IRS 1040, you exempt your kids, or you deduct your kids, your home mortgage, things like that, your IRA, 401k. Same principle. Instead of paying property taxes on the higher amount, you'll pay it on the lower amount. That deduction is currently $45,000. And they're talking about raising that to $65,000, but I'm not going to hold my breath for that, and I recommend you don't either. So basically, if you take a house that's assessed at $300,000 and you apply and get approved for the current homestead exemption of $45,000, your assessed market value for taxes is now $255,000. You take that and multiply it by the tax rate of 0.031998. Go ahead, I'll wait if you do that. And you get a number of $3,569 for your yearly taxes. Without the homestead exemption, that's over $4,100. In fact, it's $4,199 per year without the homestead exemption. Homestead exemption is for principal residences only. It's not for commercial buildings. It's not for rentals, trusts, things like that. And even an estate sale may not qualify. Now, I use the word may not because I'm not an attorney and I'm not a CPA. For any legal advice, always seek the advice of an attorney. So if you qualify and you're on a homestead exemption, it should pretty much wipe out the $650, at least in the Northeast. And if they do raise it to $65,000, your 2023 taxes are going to be most likely be less than your 2022 if they raise it from 45 to 65. If you're an executor of a house that is not currently under the homestead exemption, you can apply for a 3-year conditional exemption. You will do this under something called the tangled title provision, and I'm going to put a link to that paperwork down below in the description of this video as well. Hey, a couple quick caveats here. Number one, the deadline to file is December 1st. However, if you want the homestead deduction reflected in your 2023 taxes, that deadline is September 13th, 2022. So by this September, you have to have the paperwork in to reflect your 2023 taxes. Otherwise, it'll roll over to the next year. Number two, the Homestead Act goes by the deed, who's on the deed. So if you're making settlement this year, the deed has to be filed and recorded already for it to apply to you, for you to be able to file for the homestead deduction. We call it the Homestead Act. So if you're making settlement, especially between now and September 13th or September 14th forward, you want to get a copy of that deed and send it in with the filing, your file, your application, and give them a call. They're really easy to work with, and normally they take anywhere from 3 to 6 months to record a deed, but they've been doing it, what I've been told, in about 7 days. Your mortgage company, if you are making settlement, will escrow based on the higher amount that's coming in 2023. It'll affect your payment, and it will affect the cash you need at settlement. So watch out for that. They will not take into consideration the Homestead Act because you haven't applied and you haven't gotten it yet, even if it is on the house. It always goes with the deed, so it's not yours just because the seller had it. The third thing is, if you've been divorced or widower, and you took the deed out of the married name into your single name, the Homestead Act did not transfer with it. Like I said, it goes with the deed. So if you've transferred the deed, even a dollar deed, even though you were on it before, it doesn't really matter. You have to apply for that again. And on that note, if you transferred the property's name from a person to a trust, again, the Homestead Act did not follow that into the trust's name. It also has to be a principal residence. So for that one, you're going to need to call City Hall and ask them, or if you have any questions, call an attorney. And if you're a homeowner who would like to apply for this, or want to see if your house has already been qualified for this, or a buyer who wants to see if the house you're possibly purchasing qualifies for this, I'm going to have a link below for that too. Hey, thanks for watching. And let me know if you have any questions or need any help.